Hey everyone, Maggie here. The heat wave in Seattle hit a historic record again. Luckily, the weather starts to cool down a little. So last month, we talked about how Seattle and the US housing market hit some record highs in May. Remember how Zillow predicted a price drop? Well, we're starting to see that happen. Today, I want to talk about the latest data on Seattle's housing market and what we can expect for the rest of the year. As always, if you're new here, don't forget to hit the like button and subscribe to our channel for more updates in Seattle real estate market. Let's first look at the housing market in Seattle for June. So what can you expect in terms of prices? Well, the latest data from NWMLS shows the median price for homes in King County was $875,000 in June. A little bit of a dip from the all-time high we saw last month. But that's exactly what we were expecting. More homes on the market in May and June, combined with a little less buying power, have also started to push the prices down. But even with this drop, prices are still way higher than they were a year ago. We're talking about a 6.7% increase in King County compared to this time last year. According to a recent Seattle Times report, prices vary across regions. In June, single-family homes on the east side exceeded 1.6 million, a 13% drop compared to last year. Meanwhile, in Seattle, the median price for single-family homes was $957,000, up 3% from last year. Condo prices kind of stayed put, not much change there. In June, more homes were sold in King County than in May, 2,615 to be exact. But this is still less than the 3,782 new listings. So what does this mean for inventory? Well, it's gone up. At the end of June, there were 5,182 homes on the market. That's a 36% jump compared to the same time last year. Condos saw an even bigger jump, with inventory up 72.8% to 1,493 units. The month supply pending metric is also telling us something. It's basically how long it would take to sell all the current listings if no new ones came on the market. For homes, it's at 2.6 months, the highest it's been in 3 years. For condos, it's even higher at 3.3 months, a 10-year high. According to Auto Research, the single-family market in Seattle is transitioning from a seller's market to a balanced market. Condos, on the other hand, are edging closer to a buyer's market. This means that buyers have more choices and more power to negotiate. And for condo sellers, it's not as easy as it used to be. I've seen this firsthand this year with my own clients. Their condos are taking longer to sell, and buyers are driving harder bargains, especially in downtown Seattle. Now, let's discuss interest rates. Right now, the average rate for a 30-year fixed mortgage is around 7%. It's not an ideal number, but it's actually a little bit better than it was earlier this year. Freddie Mac's data shows that rates hit their peak in April and early May and have eased a bit since then. The Federal Reserve has even decided to cut rates this year, which is great news. But even with that cut, rates are still 0.3% higher than they were this time last year. These high prices and high interest rates are making buyers a little hesitant. A recent report from Redfin showed that many people are choosing to sit on the sidelines or even turn to the rental market instead. Sellers are also adjusting to the changing market. Right now, 6.9% of homes have dropped their asking prices. That is the highest percentage we've seen since 2022. So what does all this mean for the future of Seattle's housing market? Well, I have a few predictions based on what we've seen. The latest news from the Federal Reserve indicates that they're still pretty confident about hitting that 2% inflation target. However, Powell has also said that cutting rates too early could cause inflation to rebound, while delaying could affect the economy. That means that interest rates aren't going to drop significantly anytime soon. The federal funds rate is currently between 5.25% and 5.5%, and at most, it might inch down to 5% to 5.25% by the end of the year. Fannie Mae predicts that rates might drop slightly in the fourth quarter, but they'll still be hanging around the 6.7% mark. We might see a bit more relief next year, with rates potentially reaching 6.3% by the end of 2025. Historically, the Seattle real estate market tends to heat up in January, hit a peak in the spring and around April and May, and then start to cool down as we move into the second half of the year. Summer vacations, especially after the 4th of July holiday, usually put a damper on the activity. We might see a little bump when kids return to school in September, but things tend to get pretty quiet after November. I think it's safe to say that this year will probably follow the same pattern. With high interest rates still hanging around, many potential buyers are likely to wait until next year, when rates might finally come down. We probably wouldn't return to those pre-rate increase levels we saw in 2022. New listings don't typically slow down until after September, so we're looking at a couple of months where there might be more sellers than buyers. That means inventory going to keep growing, and I wouldn't be surprised to see it increase steadily until the end of the year before it starts to taper off. I've also noticed that more and more of my clients are thinking about selling and moving. Some are even looking to ditch their condos for single-family homes, which means we'll likely see an even bigger increase in condo inventory. Considering everything mentioned so far, house prices will likely continue edging down in the second half of this year. Zillow's latest report predicts a 1.7% drop in Seattle's overall house prices by the end of the year, and they think that downward trend will continue into the first half of the next year. Over on the east side, single-family homes in the 1 million to 1.5 million range are still going very strong. Most of my clients are in this range, so I can tell you firsthand that the competition is still incredible in this area. If you head downtown, especially to the condo market, things are cooling down. High prices, high interest rates, and a whole lot of condos hitting the market are creating negotiating opportunities for the buyers. Suburban areas like Bothell and Renton are holding their own. Single-family home prices should stay pretty stable, but they won't be as competitive as those on the east side. So what does this all mean for you? If you're a buyer, you'll have more choices and potentially snag a property for a lower price. If you've got your eye on a condo in Seattle, there's definitely room for negotiation here. If you're a seller, don't stress. The market might be cooling, but if your property is in great shape and priced right, there are still plenty of buyers out there looking for their dream home. But if you can, work with an experienced realtor who knows the ins and outs of the market. My team has been creating tons of success stories for sellers, so you can contact us too. I hope this video gave you some valuable insights in Seattle's housing market. If you have any questions or need personalized advice, drop a comment below. I'm always happy to help. I'm Maggie. I'll catch you guys next time.